A 16-year-old family member recently asked me how tax works in Australia for someone like him. As I was answering his questions, I realized that tax can actually be more complicated for teens than for adults. So I decided to make this video to walk you through how to launch his tax return online, and along the way, I'll explain how tax for teens works in Australia. For all the teens out there, hopefully it helps make this unfamiliar grown-up world a little clearer. And if you're a parent of a teen, this video is for you too. Learning and chatting about money as a family can be a great way to teach, connect, and build good habits early on. So here's the situation for my 16-year-old family member. Let's call him John from now on. In the financial year just passed, FY25, John was still in full-time school and worked regularly in the family business as a shop assistant. He earned $35,000 in gross income, with $2,688 withheld as pay-as-you-go tax. He has a savings account with a balance of around $15,000 built up from what he saved from his part-time job. That account earned $750 in interest during FY25. He also has a separate savings account where he's been putting away pocket monies and gifts from birthdays and other special occasions over the years. That account earned $210 in interest during FY25. In addition, he received a $200 distribution from a family trust in FY25. Let's get this tax return started. First, our team will need a tax file number, a myGov account, and have it linked to the ATO. It looks like this once everything is set up. From personal experience, it's possible to set this all up for a 2-year-old, so age is not a barrier. I won't go into the actual setup here. I will include the official instruction links below. For tax purposes, you are considered a minor if you are under 18 years old on 30th of June of the income year. Since the ATO already knows your date of birth, they will automatically give you the minor's version of the tax return, which includes this adjustment section for under 18. Once you are in myTax, step 1 is to check your contact details. Make sure your phone, email, residential, and postal address are up to date. Next, make sure your bank account information is correct. In case you receive a tax refund, you want it to land in the right place. Next, step 3, personalized return. Here you just answer a couple questions and tick the sections that apply to you, so the next page only shows what's relevant. That's one of the benefits of lodging online, because the paper form includes everything and can feel pretty overwhelming. So for John, we select salary, wages for his part-time work, Australian interest from investments as he received bank interest, and trust distributions as he received family trust distributions. He doesn't have any deductions, but most people probably do, so I'm ticking that option as well to show what it looks like on the next page. Obviously, this is just what applies to John. If you have dabbled in shares or ETF investments, you'd select dividends here. Or if you have your own ABN, you tick this box here about sole trader and business income. Alright, let's move on. Next. Now we are in the final stage of preparing the return. In most cases, if you wait a couple months, most of this info will be pre-filled for you. I made a separate video that goes through exactly what gets pre-filled and when, so check that out if you're curious. For John, we just need to check that the pre-filled information matches the statements and it all looks good. The only thing we need to enter manually is a family trust distribution. In his case, it's $200 of unfranked dividends, which goes under 13U. Now, the family trust distribution can be tricky depending on which type of income being streamed to you. So it's important to check the family trust distribution resolution. When in doubt, it's best to check with the family's accountant. Like I mentioned, John didn't have any deductions, but if you do, this is where you'd enter things like work-related expenses, interest income deductions, dividend deductions, gift, donations, and cost of managing tax affairs. Now that we entered all the income and deductions in the right places, it's time to move on to the most important section in a minor's tax return, the under 18 adjustments. In Australia, we have the normal adult tax rate and the punitive minor tax rate. The minor tax rate comes with a much lower tax-free threshold and significantly higher tax rates compared to adult rates. But don't worry, not all incomes of all minors is taxed at a higher minor rate. Minors pay the same individual income tax rates as an adult if they are either an accepted person or receive accepted income. Here are the definitions of accepted person and accepted income. Feel free to pause and read through them. We'll revisit them in a more practical and straightforward way in the actual tax return. So the system doesn't penalize hard-earned income of minors or income received by minors with certain disabilities or in specific circumstances. The penalty rate only applies to non-accepted income of a non-accepted minor. An example of this is unearned income such as family trust distributions, bank interest or investment income from money received as birthday or Christmas gifts. Understandably, this rule exists to prevent adults from shifting income into their children's names to reduce their own tax liability. Alright, let's get back to John's return. We are now at the adjustment section. The first question, was all your income from the following or investing amounts from the following? The keyword here is all. In simple terms, this section is asking whether all of your income is accepted income. If the answer is yes, then all your income will be taxed at normal rates, which is a more generous adult rate. But in John's case, he received family trust distribution and bank interest from pocket money and gifts. He will need to answer no. The next question is, did any of the following categories apply to you on 30th of June 2025? The keyword here is you. If the previous question is about the type of income you received, this one is about the type of person you are. Not whether you are a good or bad person, of course. It's asking if you meet the definition of an accepted person under tax rules. If you meet any one of the listed conditions, you select yes, and all your income will be taxed at normal rates. In John's case, he's still studying full-time and doesn't meet any of those conditions, so he needs to answer no. Now the ATO says you must complete the following information from your return, or you may be taxed at a higher rate than necessary. What this really means is, since you are not an accepted person and not all of your income is accepted income, now is your chance to separate your accepted income from the rest. If you skip this step, the ATO will treat all of your income as non-accepted income and will tax it at a higher minor rate. See, if I skip this step, leave everything as zero, and just calculate my tax now, the tax bill looks pretty scary. Now let's go back and do it properly. So for John, his part-time salary of $35,000 is accepted income. It goes here. And the $750 of interest he received is income received from investing the amount above. It's worth mentioning that pocket money and gifts from birthdays and Christmas and similar occasions aren't accessible income, so they are not taxed themselves. However, any interest or investment income earned from that money is taxed at a higher minor rate because it's not considered accepted income. So don't include that kind of income in this adjustment section. John does not have anything in this category, so he will just put 0. Again, he doesn't have any deductions, so he will put 0 as well. Did you receive any primary production income? This refers to income earned from farming, fishing, forestry, or similar activities that involve producing natural resources. It's a no for him. Save and continue. So now we know John has $35,750 taxed at the adult rate, and $2,688 has already been paid through the pay-as-you-go system. He also has $410 in non-accepted income, which will be taxed at a minor rate. For the accepted income, we can use the adult tax calculator. He should pay $2,823 in tax, including the Medicare levy, minus the $2,688 already paid, and he still owes $135. For the non-accepted income, which is $410, it looks tax-free at first glance since it's below the $416 threshold. But there is a note under the minor tax table that's very easy to miss. It is a bit cryptic. What it really means is that when calculating tax on non-accepted income for a minor who also has accepted income, the ATO doesn't just use a minor tax table. It also checks what tax rate would apply if the non-accepted income was added on top of their total income and taxed at normal adult rate. Then it uses whichever rate is higher. In John's case, he already has $35,750 in accepted income. When the $410 sits on top of that, it's taxed at 16% plus a 2% medical levy, which totals 18%. So John owes additional $73.80 on the non-accepted income. Now add that to the $135 underpaid tax on the accepted income, we get $208.80. That's how much tax John still needs to pay the ATO. Let's see if the ATO agrees. Et voila! A tax return is all about wrapping up the past, but it should also get you thinking about planning smarter for the future. If you want to learn more about making the most of your investment, super, or money in general, be sure to subscribe and check out my other videos. Thanks for watching. I'll see you in another one.